Hello, best investors of YouTube. Today is the Monday and I'm doing an update on the best dividend stocks for you. And today we are gonna talk about top companies which go ex-dividend this week. It's a great opportunity to catch this moment and get dividends and easy money very soon. So we have several companies I want to mention: Nike, Unilever, McDonald's, and S&P Global. And in the end of the video, I'll show you some really cool insight regarding the leading retailer that strengthened their position on the best dividend stocks list and has more than 10 years of dividend increase. Okay, and the first stock I'm sure you're very familiar is a Nike. This is a great company, and it's one of the largest athletic footwear retailers in the world. Nike draws nearly 67% of their revenue from footwear, followed by nearly 30% from apparel, and the remainder mostly from the equipment. So let's look at this data. They will go ex-dividend in 3 days, so you still can capture this share. And they're pretty stable, so they have a very stable ranking 4 from 5. I really like this website, dividend.com. I highly recommend to be their client. You can find a lot of information about dividend stocks. So what is important? They have a payout ratio about 0.67%. That's not very high, but that's really stable company you can work with. Nike operates more than 300 stores in US and nearly 750 stores outside of the US. That's very impressive. Naturally, Nike draws the majority of their revenues from international markets with non-US clients. Most of the manufacturing takes place outside of US, where Nike has about 120 really cool factories that are helping them to produce really cool footwear. During the first quarter of 2021, Nike direct sales grew by 13% to 3.7 billion compared to quarter 1 2020. However, the highlight of the quarter was Nike Digital that grew by 83%, representing the fastest growth channel for the company. With this, the company was able to offset a nearly 20% decline in compatible store sales caused by COVID-19 related restriction. That's really cool. And also, during this quarter, Nike's cash flow from operations also improved to 882 million compared to 394 million during the quarter 1 2020. That's a great improvement. This kind of dividend stock really worth to buy just to diversify your dividend stock portfolio. And improving conditions in quarter 1 2021 made it easier for Nike to increase its quarter dividend from 24.5 cents to 28 cents payable to shareholders. So Nike is a really cool dividend aristocrat stocks, and they are on my list, so I will be adding more and more stocks. And the next company which go ex-dividend this week is Unilever. And you know, when any income investors assess the consumer staple sector for dividend stocks, one of the US best giants like a Procter & Gamble typically comes to mind. But there are foreign consumer staple stocks that should be viewed as a favorable dividend stock for you, if even not more interesting than Procter & Gamble. Let me show this one. So this company is Unilever PLC. Unilever is based in the United Kingdom and was founded in 1985. Unilever has a number of strong staple brands, some of which include Dove, Eggs, and Comfort. Due to Unilever's premium brands as well as its strategic investment in the emerging markets, the company generates really cool profitability each year, along with the growth rates that are well ahead of US-based competitors like Procter & Gamble. So first of all, they have a dividend increase this year and this quarter. They have a pretty stable growth of their dividend payable amount. They also have a pretty stable cost of share. So and they have a very, very high ranking on dividend.com. So that's definitely one of my favorable dividend stock in my portfolio. And what is important for me, Unilever returns a significant portion of its earnings to investors as a dividend and raises its dividend on a regular basis. And this company go ex-dividend this week with payout 51 cents. I will be adding this stock, no doubt. Here we go, and one more really cool dividend stock is McDonald's. McDonald's is also an excellent dividend payer and has grown its payouts consecutively for last 14 years. It operates in more than 67,000 restaurants in 112 countries all over the world. So it's a very well diversified company. What is really cool, I live in Texas and I see that during last crazy freezing days, they were one of not so many restaurants. They were still open and help other people to find some food. So let's look on some data regarding McDonald's. So they have a very high recommendation ranking. Also, they have a pretty high annualized dividend yield, about 2.40%. That's a pretty high, I should say. And consecutive years of dividend increase is 45 years. Unbelievable. So this company definitely worth to be in the portfolio. McDonald's Corporation has a long operation history and a proven track record of returning cash to shareholders. These returns come from its highly profitable business model and massive economies of scale. It generates highest profit margin thanks to a lean cost structure and effective utilization of franchise model. And by aggressively franchising its restaurants instead of owning them, McDonald's generates a steadier stream of royalty payments, while the franchisee is responsible for most maintenance expenses. Really cool model. McDonald's is one of the most popular dividend stocks in the entire market, and it's go ex-dividend this week with payout ratio $1.29 per share. And one more really cool company I found this week. It's a leading retailer tractor supply company with more than 10 years of dividend increases. They improved their dividends stock position in the dividend stock list this week. And what is worth to mention, retail continues to be a battleground. Already a cutthroat industry, the pandemic, rise in online shopping, and changing consumer taste have created a kind of have or have not situation. Those retailers with a strong brands, top niches, and omni-channel aspirations have been dominating their less equipped rivals in a big way. And in this winning cap is a Tractor Supply. Tractor Supply has learned on its niche as an Amazon proof to keep on winning during the pandemic and in the face of changes to the retail environment. Owning and running a network of farm stores, Tractor Supply focuses on the more retail sections of the nations. Items like horse feed, barbed wire, and equipment for farming are not very suitable for online sales and often needed it now items. So let's look into the data regarding this company. First of all, they increased their dividend by 30% this week. Also, they have a very high ranking, 4.6 from 5. That's a very high. Also, they have been increasing consecutively their dividend payout during the last 10 years. They have a pretty stable dividend growth, pretty stable cost of share, so you will have like two benefits, growing dividends and growing price of the stock. So it looks like a pretty good company. The dividend yield is not very high, but when you're mixing this type of companies with more risky companies, that works pretty well. So Tractor Supply has continued to see high revenues during the pandemic. In fact, sales for 2020 hit a record and increased by over 30%. So to summarize, here are 5 reasons why you should own this unique stock. First of all, its focus on a specialized and Amazon-proof rural market niche allows it to pull in more than $8 billion in annual revenues. The second reason, it continues to see the sales growth during the COVID-19 pandemic, which new someday delivery and pickups options available from this company. The third reason, It has increased its dividend for more than 10 years straight. And last but not least, new store concepts in the pet care sector are fooling their growth very well, and they has a steady payout ratio of 31% and growing yield of 1.42% annually. Please tell me in comments what kind of dividend stocks you are buying this week, and tell me what kind of companies you want me to cover next week. Have a good day, and I wish you a good payouts from your dividend portfolio.